Was there a failed auction in Bank Nifty in F period yesterday? No, it was not a failed auction. Definitely not. First, you need to ask what reference did we test below. HVNs do not create failed auctions. Yesterday's low, okay, I can agree. But look at the amount of time spent here. So this is definitely not a failed auction. Failed auction has to be immediate, all right? So if I have to show you an example, you can say this was a failed auction which was not confirmed because we did not tag the opposite end, right? But this was an attempted failed auction. This can be considered as a failed auction if we have gone, yeah. So here you can see this was yesterday's high. We went above that by 1 TPO, took out the other end. So this A period was a failed auction which was tagged late in the day. But this is not a trade, all right? So if we leave behind a failed auction, that does not mean the market is coming back to that. No, absolutely not. It was tagged. Tagged meant it was just visited. That's it. PC further says FA should happen immediately means only one bar it should happen. Yeah, one or maybe two bars, but the intent has to be there. See, even this can be considered as a failed auction. See, the intention has to be there. You come lower and then you reverse back up quickly. But now contrast that with what happened yesterday. See, you come below this low, the amount of time spent is ridiculous. It is not immediate. It's a lot of time spent. So that is not the correct failed auction. But yeah, if it happens in one period, that is even better. Sachin is saying, except previous days high low, which other references to look for a failed auction? Range high or lows you can look at. If there is a nice consolidation and you look above that and fail, that can be considered like. So what is happening here? You can see there are two clustered highs. There is this HVN. So what are we doing here? We are trying to test. Okay, so we go above this and then we fail. So there is no new demand yet. We go lower, we find more buyers, then we go higher. Again, it seems like there is no demand. Then again on this day you see acceptance, and that tells me that yes, maybe market might be interested in higher prices. So even this can be considered as a test. Okay, so you go below the low and you test yesterday's HVN, because why did we create a lower value area and then we are moving higher? So we come here, we test for more supply, we do not uncover that and go back up. Okay, so it's very difficult to call it a failed auction because of a lot of time being spent here. This can be a test, but again, I mean, it's one and the same thing. Subtle differences. More important is to focus on behavior rather than the names. Whether you call it a test or you call it a donkey, it does not matter, as long as the behavior is consistent that you are trying to monitor. So that is more important. Many people complain about lots of jargon in market profile. Already they say that terminology is complicated, this and that, because people are focusing on terminologies. Why? Because it's easy to sell a terminology. Someone can come to you and say that, okay, this failed auction, it will be revisited in T plus 3 days. That immediately your interest is there and you want to learn everything about that setup so that you can take the next trade. But nobody is focusing on behavior, right? If you focus on behavior, you will not even know what to call it, but you will be able to read the charts better. So the jargon, I was the one who was more interested in jargon. I would argue with people why this is a failed auction, this is not. Now what I have understood is we need to focus on the behavior of the trader. What resulted in this particular move? What objective is being met with this particular move, okay, of the traders? So in this particular case that you can see on the charts here, the market goes below the IB low, but then tests this and then goes back up. So what exactly happened here? That is the more important question. What is it called? I don't care. What happened here? We went below IB low. First, we did not go below the IB high. We did not go above this important high, and this was also close to this HVN. Then we come lower. So immediately what happens? People will start saying that, okay, yes, last point of supply is holding. But then what happens? We go lower, we test this HVN and immediately get rejected and then slowly recover. And then the next day develops higher value area, next day develops even higher value area. So what is happening here? We came to test for new business by sellers. The auction wanted to test whether is there a good seller business down here Are there traders interested in selling at lower levels? If they are not, right, then the market has to go higher to find more sellers. And the market went to this high, did not find more sellers. Went even higher to this last point of supply, not yet. Yesterday, some excitement was there, but then again we recovered. And today again we are trading inside yesterday's range, near yesterday's high. So all that tells me that the aggressive supply that we are looking for is still not seen in the markets, and that might keep pushing the auction higher. Ramnios is saying, should the test happen beyond short-term references, or sometimes you call the pullbacks also as a test which don't cross beyond the short term? Again, that's the same thing I'm trying to mention here. This is a pullback only. All right. This is what? This is a pullback. We try to go higher, we come back down. Now, you have some idea about the markets. Okay, if it goes below this low, that's it. But this whole thing has emerged from this, right? This is, we don't have trade in this zone, but this is the area where buyers were equal to sellers, and then it resolved to the upside, so we went higher. So this whole thing is an up move, then you get a pullback, and then you continue higher. This is a test of what? Supply at lower levels. Is there supply at lower levels? No. Where is the market likely to go? Up. Simple. See here again, this is an important HVN. We open above that, and I say if it comes down, this needs to hold, otherwise then there are multiple distributions may not hold, and we might straight away go to this low. Fine, we go lower, range extension, everything, then there is a pullback, we come higher, and then again fall. Why did this happen? Okay, why did this happen? What were we testing? We're testing for demand. Like if we go higher, do buyers again pick up the price and move up? No. So we go down, then there was a higher likelihood that we will tag this or tag this, but then what happens? Poor trade facilitation. So why these patterns are happening? Why are we not testing this? There might be two reasons. One, higher time frame are more interested in buying, so they are buying all the pullbacks, or higher time frames are absent, shorter time frames are buying all the pullbacks. And whenever shorter time frames are involved, the objectives will not be met, and you'll get some weird market action. So Jim Dalton says that if you reach exactly to a reference, it is shorter time frame activity. Yes, on profiles it is true, but like this test, this is not shorter time frame. This is a test by smart money for residual supply, which it did not uncover. Make sense? So you need to be able to distinguish between that. And this is October 31st. So if you go to shorter time frame chart, let us see what we can find. This is that pullback. Now you can see we started moving lower. We have this micro balance here, and we came very close to that. So that is where we probably wanted to test, whether there is interest in more buying or not, and we did not uncover that. We fell sharply. You need to focus on the trader behavior. As long as you are focused on trader behavior, your trading will go in the right direction. Okay, Ramnios is asking, what does the test happen for? It is that one strong party is seeking for the acceptance or quality of strength, other party showing. Is test happens for residual business? Yes, it's one and the same thing. It's one and the same thing. You need to understand that. And they happen on different time frames. So a shorter time frame test will yield shorter time frame results. A higher time frame test will yield higher time frame results. Make sense? See what happens, I'll tell you. Let's say we test this last point of supply, and the market goes lower, and higher time frames are not happy with this response, so they believe that market is likely to go even higher. So what they do, obviously, as the market goes lower, they buy. Market even goes lower, they again buy. Now why I'm saying they are buying? Because of the profile shape. It's a B shape, it's normal distribution, lower value area development. All right, so what does that tell me? That here we tried to move lower in the morning, failed auction and all, last point of supply test and all, but we could not continue because buying came in, it stalled the market. Then market opened lower, but again it stalled. So what does that tell me? Someone is buying, and that buying is stopping the markets. Then it goes higher, it goes back down, and it tests. So what is it testing for? Let's say smart money bought here, smart money bought here. Okay, now they are testing. What are they testing? They are testing if there is any supply at lower levels, is there any need to test these references. Because when the market comes down and more selling comes in and pushes the auction lower, they have these two long positions to deal with. They'll probably try to hedge them. They'll probably, if they believe that this is going to hold, they'll probably average it here. But now that market is going higher, they are comfortable absorbing supply at these references. This high, the last point of supply. Why are they absorbing supply? Because they have already tested and they have found that yes, market is not interested in going lower, so market goes up, again it goes lower, again they kind of make another test, some time is spent here, right? So this is not very clean. If I remove all this, and you can see this was a clean test, immediately rejection. This is not a clean test. So what that tells them, that maybe there is something that they have not fully understood. So if it would have been a nice clean test like this here, f period testing, and then immediately we are going higher, probably we would have seen continuation. But now no, we don't have continuation. What can happen? We can come in this zone. Okay, we can slowly come in this zone. We can even test below this low, and this time if you get a rejection, great. But if we again spend time, then we know that okay, this is not happening, this HMN is not holding, this is not a test, there is still residual business here. Now what do you mean by residual business here? It means that there are people interested at selling, right? At these levels also, they feel that these levels are high, and buyers are not yet ready to buy at these levels. Otherwise, it would be rejected. If it is not rejected, what it means? Buyers are happy to trade here. Sorry, buyers are not really interested in trading here. Then the auction will go even lower, and then you'll have to find out what are the important references. This is the HVN that comes to mind that you can immediately see. So maybe the auction will come to this HVN to find strong buyers. If they uncover strong buyers, great. No, they'll go here. Then what about people who bought here? Either they are exiting here or they are absorbing supply here. And if they monitor this and this kind of activity and they're not happy, probably they will exit, they'll start hedging, whatever, they'll do their own thing. So now what we need to observe is this HVN. Why? Because we developed this HVN, it was tested, respected, we went higher. Market develop another HVN, we come, this test is not as good, we go higher, but now we are having a sideways development. We are not getting follow through, we are not getting higher value area immediately on the next day. So now if the auction comes here in this zone and it does not get rejected, it means auction is not uncovering buyers. This HVN is not providing the demand or support. So where is it likely to go? Lower. So that is how you should be looking at the auction.